counterparty risk. So, Emelie.
Combine digital assets with traditional financial products on tax beneficial accounts.
You have the certificates product and how popular it is. At the same time, if you look underneath the hood of where are your crypto stored and are you buying actual crypto, the answer is no.
In this ocean of FUD and catastrophic events, today I will bring you an amazing piece of news for the whole crypto industry. It's a regulatory breakthrough for Bitcoin and Ethereum, and it didn't happen in New York or in London or in Singapore or in the Bahamas. It happened right here in Sweden. I don't know if you can tell, but it's snowing. I'm going there to meet the people and I'm taking you with me. So where did you hear it first? CTO got your back. Let me first explain what this is about. Already in 2015, Sweden got the world's first Bitcoin-based security available on a regulated exchange when it listed on Nasdaq OMX in Stockholm. This is an ETP, an exchange-traded product, not an ETF, which is something more specific. Still, this is what I have been using personally since 2019 for my Bitcoin and Ethereum exposure in something called ISK, which stands for Investment Saving Account. So this Bitcoin Tracker 1 is a price tracking certificate, which tracks the price of Bitcoin, also over long time periods. There's a small fee, but considering the size of the moves in Bitcoin, that has not been so important to me. There's one for Ethereum and a few others. And this has been in every single one of my videos. ETP price tracker certificates in ISK through his bank. So if we now compare these two options, either owning Bitcoin directly or owning Bitcoin price tracker certificates in ISK or Capital Insurance. Why did I do that? It's not very cypherpunk, is it? Well, there are two huge advantages. The first one being the tax principle. With Bitcoin in Sweden, you pay 30% on capital gains. While in ISK with certificates, you pay a small amount of the total holdings, which for 2022 was 0.375%. I'm really looking forward to this. Say that you started the year with 1 million crowns and you ended the year with 2 million crowns. Then your capital gains is 1 million, capital gains tax is 30%, so you pay 300,000 SEK in capital gains tax. Now let's calculate the same for this ISK. Apologies for the Swedish. Start of January, we had 1 million crowns, maybe in April we have still 1 million crowns, but then in July we made a good trade, so we have 2 million crowns, and that's also what we end the year with. We don't deposit anything else. Calculate, then the average value during the year was 1.5 million crowns, which is multiplied by 1.25% for 2022, which gets us this number. So we had the same amounts, 1 million became 2 million, which means we will pay 5,625 crowns instead of 300,000 crowns. Now, this is only beneficial if you actually make money, and it kind of only makes sense on very volatile instruments. If it's something that moves very little, probably this doesn't make sense for those kind of assets. I should add here, I'm an engineer, not a tax specialist. I just read what it says here on the homepage. So there's a huge difference in the tax principle. And because interest rates are higher in 2023, that number will increase. But even then this number is 44,000, and the comparison still becomes 300,000 versus 13,000. Of course, this is an extreme example where you double your capital, but still in crypto this isn't that uncommon. While if you lose money, there's nothing to deduct with ISK, but still, for me, I see this as a huge advantage. And in practice, it's an even bigger difference than what we look at now. Physical Bitcoin, if you make $100 profit on one Bitcoin trade, and then you lose $100 on the next Bitcoin trade. In Sweden, those don't cancel out. So you can actually find yourself in a situation where you start with $100, end with $100, never have more than $100, and still owe $1 million in tax, which is bizarre and doesn't make any sense, and it's super dangerous. Some teenager can program a rapid trading bot and end up in bankruptcy for life, even if he only had $100. It's crazy. Now, contrary to many other people, I don't mind paying tax. I feel we get a lot of value for that here in Sweden. That tax pays for free schools for children, free universities where only your brain matters for entry, not who your dad is, free healthcare, and we could afford actual experts in the National Bureau for Public Health. But I pay a lot of tax already. If there are multiple approved systems, you don't have to use the worst one. And the explicit intention with ISK, Investment Saving Account, was to encourage saving and investing, because that's not a zero-sum game for the country. If I bring in more money to Sweden, I will pay more tax in all kinds of ways and also fuel the Swedish economy. Then there is a second advantage also, and that is reporting transparency. It's very complicated and time-consuming to report tax for physical cryptocurrencies, because you can't just take the total profits and deduct the total losses. No, you need to calculate the profit and loss of each trade, because the losses are not fully deductible from the profits. And then on the other side, tax authority need to check all this. In this case over here on the right, the bank reports the numbers straight to the tax authority. As a private individual, I don't need to do anything. Just pay the amount. And since I am the hodl sucks guys, I do want to be able to enter and exit, not ride the trend all the way down because I feel locked up with the tax construction. But there's also two big disadvantages. The first one being the trading hours. Bitcoin trades 24/7, while the certificates on Nasdaq Nordic only trade during the opening hours. So you could get stuck in a position while the price keeps dumping over the weekend and you can't get out. Now, this used to be a super big problem, but lately Bitcoin hasn't really moved much on the weekends for some reason. And disadvantage number two, and this is the big one: counterparty risk. If you hold your Bitcoin yourself in a wallet, you don't take any counterparty risk. And if there's one thing we've learned during 2022, is that counterparty risk matters. The money is gone because the entity that held your money went bankrupt or did something criminal, which was very difficult to see from the outside. And since I use this myself, I've spent quite some effort to try to understand what the counterparty risk is with this product. And I couldn't figure it out. It's not that there is no information. There's great info here. And they have Armanino engaged. They display the liabilities as well as their assets, and saying fully backed. The securities were fully backed as of December 9th, just a few days ago. Same for Ethereum. And there's this report here. Am I a robot or not? Sometimes I'm not sure. Read these reports, and it says for each wallet address provided by the third-party custodian, extract wallet balances and check all this physical held, and this seems very thorough, and that's why I've been using it. But frankly, it was more of a gut decision. I still couldn't quite read out where the assets are and the liabilities. It's surely just my own failure, and I'd love for CoinShares to explain it to me, and I'd be happy to share it. But as of right now, I don't know what counterparty risk I'm taking really. Were any of these assets at any company that has been challenged this year? Where are the Bitcoin? I don't quite know. And again, it's surely just my own failure to read it out from this, but I don't quite get it. And I don't like that. So I've written here that it's unclear to me. I'm not fudding this in any way. I'm not saying there is a problem. I have no reason to suspect that. I'm still using it as of right now. I'm just saying that as of right this moment, it is unclear to me, and I don't like that. Beautiful snowy day today. This is Kungsträdgården in Stockholm. Beautiful in the spring with cherry blossom trees. I should take you guys here sometime in the spring. Now, what if there was a way to have actual Bitcoin where it's clear where they are, so I can assess the counterparty risk, but still use one of these tax wrapper constructions? But that doesn't exist, right? Well, now it does. Let's go meet them.
Hey.
Hey.
Nice to take it over in sunny.
Emelie, I saw your video about Lund.
You get into crypto?
2013, when we started the company, I got actually into crypto. Before that, I think I got introduced at some restaurant and I wanted to look into it. But I waited until the Cyprus crisis in 2013 when the price went to $266. And I thought I missed something there. So this was the time before MT Gox was still around.
But surely something like Mt. Gox can never happen again, right?
Yeah, exactly. And it was clear that there needed to be players already back then that were doing things better by the book and with the customer perspective in mind, from a risk perspective. And here we are 10 years later, still talking about the same subject, hence the cup.
Most people, when they do understand the product, they don't seem to get how big this could be and what it means for the industry. It was fun that you picked it up.
CTO got you! So what's the background to this product? How did this come about?
I think Emelie is the one better to answer that one. I mean, she comes from the finance industry and had a good understanding of how you could put something like this together.
So Emelie.
Well, I was thinking about how you could combine digital assets with traditional financial products. And since the certificate has been very popular for a long time on tax beneficial accounts such as ISK or capital insurance, I started playing with the thought about putting like digital assets such as crypto and Ethereum that we are now starting with on a capital insurance.
So what's interesting is you have the certificates product and we know what the volume is being done on that product and how popular it is. At the same time, if you look underneath the hood of where are your crypto stored and are you buying actual crypto, the answer is no. We obviously were looking for some alternative that is real crypto where you know where the crypto are being held. We think that this is the way to solve that and we hope that the customers see that as well. These posters all over Stockholm. People had to guess what it stood for and then they would get a discount code. So
it was just before FTX, so DYOR was pretty timing for the campaign.
So what is it?
We're sitting in it.
Exactly.
So we've enabled the possibility to invest in real crypto assets on a capital insurance as opposed to investing on certificates tracking the price of Bitcoin and Ethereum that you can already store on capital insurances and investment savings accounts.
You have an insurance distributor where the customer signs up with and they're distributing the insurance, which is Quantum Leben that we have an agreement with. And basically they, on behalf of the customer, then purchase the crypto with Safello. You have real crypto, you know where it is, you know who's holding it on behalf of the insurer, and you know that you can redeem it.
For the customer to enjoy the tax benefits that you don't pay any capital gains tax on your profits. And you can also, because it's an insurance product, you also have the possibility to appoint a beneficiary.
And the reporting is done by the institution to the tax authority. You don't need to do it yourself.
That is correct.
Well, the life insurance as such also is kind of a big point. Like a lot of people, I did a quick poll on Twitter, have not thought at all on what happens to their crypto once they pass away. And
before leaving the office, I told you guys that one issue that I have with the current setup is that I don't really know where the Bitcoin or the assets are. Do you know?
How far did you get in finding out?
You have to have trust in the issuer.
I think we've seen issuers of certificates both have exposure to like Luna and FTX. In the case that we are, the way we set up, we're the custodian with, the whole treasury operations around it as a traditional financial institution. So both the governance structure, the regulatory framework, and then how you operationally do it, and within what regulatory regime you operate in, I think all of those things matters. And then transparency around your reserves, where do you hold the coins? And there, we tried to make a first step with proof of reserve, and of course we're audited. We're a public company. We're listed on NASDAQ First North. So it's all the checks and balances that, traditionally in crypto we shy away from being totally into DeFi. But at the end of the day, when it comes to where you have your money, if you have it in custody, those checks and balances matter quite a bit. Yeah.
When you open a capital insurance, the insurance itself is owned by the insurance company. The customer is the insured person. The insurance itself is distributed by an insurance distributor. The insurance distributor is Hubbins.com. The insurance company is Quantum Leben, and the crypto service provider is Safello. So Safello will always be responsible for the crypto services and the custody of your crypto.
All right, but then my Bitcoin will be at an exchange, Safello.
Right.
Isn't that same as, FTX?
I wouldn't say FTX. I mean, it's about the transparency and about the custody model, right? So we're regulated in Sweden. We've been around for almost 10 years now, working with a top 4 bank. We've been audited, like our last audit with Finansinspektionen was completed this year.
And do you have real audits? Because a lot of companies, they talk about audits. But
no, I talk about the regulatory audit, the actual regulator, not.
Yeah.
And we're public companies, so we have quarterly and annual reports, of course. Those are audited by an auditor.
Exactly. So you actually have audits, real audits.
Yes.
Yeah.
And for us as a public company, it's really important that we keep our customer funds separated from our own funds. So there's never any commingling of the funds. So we keep them off our balance sheet and separated from Safello's assets. And we do not dispose of the customer funds at all.
So you don't take customer funds and do high leverage gambling with them. See how it goes.
Exactly. That is a bad joke, by the way. No, I mean, and we've been very conservative even on our liquidity setup. So normally, like a lot of the independencies also on the liquidity side exist where people have to put up collateral. In some of these bankruptcies, those funds also get lost. So we've worked with, in this case, Bitstamp, one of the liquidity providers, has been around for a long time, where it is pre-funded, but we also work with blockchain, which has also been around for a long time, but we don't actually have to put up any collateral there. So there's also, from an operational point of view, Safello's always taken like the minimum amount of risk with everything. And for the longest time, we felt like we were drawing the short straw with that. And I think now, again, it starts paying off where people get the point of why we've been as conservative with some of these things compared to some of our peers.
But are the client funds held bankruptcy remote? Say that Safello would go bankrupt tomorrow because you make bad business decision. Nothing to do with this, but what would happen to the client Bitcoin in that case?
Yeah, it's a good question, right? So we did have legal, because technically, if you look at the legal framework, there is no protection like that in a European legislative point of view. With MiCA, Markets in Crypto Assets, in 2024, probably coming into effect, that would change. But it hasn't been tested in court whether your assets are then protected from bankruptcy. Having said that, we did do an external assessment with a law firm, which we've also published on our website. You can see the assessment there around customer protection, where it is basically confirmed that they are bankruptcy remote, but it hasn't been tested in the court of law.
That's actually a great message. I did not know that before coming here.
And I think with MiCA, on the one end, it becomes more stringent. Obviously, some things that pass through that as proponents of the decentralized finance movement we're not so happy with. But on the other hand, I think it creates some of those clarities with customer protection. So I do think at the end of the day, for customer protection, for people using centralized services like ourselves, it's going to be beneficial where some of these things are going to be cleared up. But in the meantime, and that's how, of course, we've been operating. It's self-governance to a large degree.
And I can add one thing here. I have very high trust in the Swedish system for audits of company audits, because it's very stringent and it's not easy to commingle something and hide something like in Bahamas or something like that.
Our corporate structure, again, we're a public company, is we have one group entity, Safello Group AB, which is the holding company, and then we have Safello Technology Development AB, where the development happens and the IP sits, and then we have Safello AB, which is the operating entity that holds the registration with FI. And then we bought Bitcoin.se, the largest educational platform, which sits in Rational Money AB. And that's it. And they're all Swedish entities. So there's no foreign entities that are hiding ownership or crypto holdings or anything like that.
Okay, but then I have another question. Even if you don't criminally misappropriate the funds in Bahamas or go bankrupt, that could be an honest mistake. It could be that there's a security breach. Suddenly, the Bitcoin are physically gone by mistake, by a security issue. So how do you manage the security for this?
So we built the Safello wallet upon the infrastructure and technology from Fireblocks. We actually have a treasury team that is secret to anyone who's not involved in the treasury team. And it takes 3 persons out of that treasury team to actually together combined sign a transaction. So it's a very high security for moving funds in and out of the Safello wallet.
I can add that the security as such, we also work with external security auditing firms that do things like red team exercises to look for weaknesses in our security. I mean, some of security is about obscurity, like security through obscurity, so not being fully transparent about how you do certain things. But I think there we apply kind of the treasury approach of how you would look at this as any financial institution or bank that's handling customer funds. So it's corporate governance, it's the regulatory side, and then it's a technical part, and then of course the policies around it and how you actually operate that. You know, there shouldn't be a backdoor, as we've seen with some other companies. There shouldn't be a single person that can move any large quantity of funds. Those are basics in traditional finance, but unfortunately still not commonplace in crypto.
So before coming here, I made a table where I tried to compare the different solutions, Bitcoin and the Bitcoin price tracker certificates in ISK.
This is great.
Now that we have the experts here, let's add one column to this table for you guys, and let's see if we can do this together. So my understanding, guys, not being a tax lawyer here, is that it's the same as the ISK case, but don't take my word for it. Probably the same as this one. And then tax reporting is done by the insurance company.
Yes.
The trading hours then.
Yeah, so the trading hour in the beginning for the MVP will be that one order is sent per day to Safello from the insurance company. As soon as possible after the launch, start working on the second iteration, and the end goal is to have 24/7 trading. I mean, we could have waited with the release of this product another 6 months. We figured it's better for the market to start in small and then keep on building the product as we go.
And as you know, guys, I still wait for the daily candle close anyway, so for me that doesn't matter that much.
What's the Larsen line say?
Daily candles trend, unfortunately, is still down. So counterparty risk here, that's the big one.
So the counterparty risk for the actual Bitcoin in capital insurance would be the custodian, which is Safello. So we can put in Safello during counterparty risk. But I think that we should, the counterparty risk in Bitcoin price tracker, it's not unclear because it's unclear where it's stored, but it's unclear how many counterparties you have, because you can have an issuer of the product who then could invest in futures.
So I wanted to be very conservative here and write that it's unclear to me, but you're saying that it's unclear to you as well as a professional in this space?
Yes, it's unclear since you could in a certificate buy, you don't have to buy actual Bitcoin, you can buy futures, for instance, and then that is a contract, or you could buy a contract for differences. I just think the counterparty risk could be extensive in multiple layers.
Okay, so we modify this one to just unclear, because turns out it wasn't only unclear to me.
Good. So as for any insurance product, the actual Bitcoin are legally owned by the insurance company, whereas the insured person, you as the investor, have a claim on the insurance company on the value of the holdings. And the same goes for stocks, fund shares, or other ETPs that are held within capital insurances.
Okay, but do we also take then a counterparty risk of the insurance company? What if the insurance company goes bankrupt?
I mean, the insurance company is... they have very rigorous requirements on their capital base. They are not disposing of the customer funds. So the risk here with crypto and other assets is where the actual assets are held and stored.
So these insurance companies are very highly regulated, and they are not specific for crypto.
No, exactly. No. If the insured person holding the crypto would pass away, the beneficiary would get 101% of the value of the insurance.
So 1% up.
Exactly.
But sadly, what is the name of the insurance company again?
Quantum Leben.
And they're registered in Sweden as an insurance company.
They're from Liechtenstein, but they have passported their license to Sweden.
There are layers of reliance on this model. So the claim with the customer lies with Quantum Leben, the insurance company, and they are relying on Safello. So the bankruptcy remote part also applies to the insurance company for the end customer. Because they're a licensed entity, so they hold those funds that they have with Safello separate, of course.
All right, so here's the summary table.
So what do you think?
I think actually it's great. I have one more question. Is this only for private individuals, or can companies like an investment company also use capital insurance?
Yes, they can.
That means that I'm actually gonna use this.
Ooh.
So actually, guys, I think this is great. I'm gonna use this myself.
Awesome.
Great.
Thank you very much.
Thank you.
Thank you. Let's go back to the office. Now that we're back from the snow in this warm and cozy office, I'll share that there is one more row in this comparison matrix, which is an even bigger reason why I like these kinds of solutions. I mean, the difference in tax principle is good, but if you're up 1 million Swedish crowns, paying 300 in tax doesn't seem so bad. And reporting, sure, it takes a lot of time, but I can do it. I'm the best person I know with Excel. I rarely do mistakes. But there's one more reason, and it's one which I think many people in crypto grossly underestimate. And a problem which I think will get worse with increasing reporting requirements of mapping wallet addresses to individuals. It's the wrench attack. You know, we build these super crypto systems that even all the computing power of the world can't break. But some thug can take a $5 wrench and walk up to somebody and beat them until they send them their Bitcoin. And for me, being rather public, that's a real threat, but I think no one should underestimate it. This was the #1 reason why I decided to transition to these bank-run setups in the first place, because it doesn't matter how much you beat someone, they still can't transfer more than a very small amount from their internet bank, so you can't do it, and everyone knows that. There are solutions to this with self-hosted crypto as well, but most people don't use it. While both this one and this one we've reviewed today are safe against the wrench attack. So dear thugs, my recommendation is to steal my car instead. Let me also remind you all that I'm not your tax advisor. I'm an engineer. I'm good with technology. I'm good with math, technical analysis, but don't rely on me for your tax planning. That's one area where you need real authorized tax experts, because you can go to jail if you fill out those forms wrong. Don't rely on a happy engineer on YouTube for that. I'm just sharing what I'm studying myself to raise awareness of what exists, because if you don't know that stuff exists, you probably won't ask your tax advisor about it either. And while this is in Sweden, similar things like this capital insurance exists in most other countries. So go investigate it. And for this specific product, this is not a complete summary. You need to go and read up on that yourself. Read the actual documents. I'm just trying to make you aware that it exists. Thank you, tack. CTO Larsson out. Hej då.
You did $100,000 worth of socks.
Yeah, to give to members.
$100,000 worth of socks.